Welcome to Market Brief, After Hours. We have a packed show tonight. Wall Street is hitting brand new milestones, but underneath the surface, there's a massive tug-of-war going on between artificial intelligence enthusiasm, surprising economic data, and major geopolitical tensions in the Middle East. Let's start with the big headlines from New York. It was another record-breaking day, wasn't it?
It absolutely was. The S&P 500 managed to tick up to a historic milestone, marking its very first close above the 7,600 threshold. It gained 0.13% to finish the session at exactly 7,610. Meanwhile, the Dow Jones Industrial Average had an even stronger showing, jumping 229 points, or 0.45%, to close at 51,308. That's also a new all-time high for the Dow. The Nasdaq Composite lagged behind slightly, but still managed to eke out a tiny gain of 0.03%, closing at 27,094.
That is quite the performance, especially considering some of the headwinds we saw. I understand Alphabet was actually a pretty big drag on the S&P 500 today.
Yes, Alphabet shares fell nearly 4%. The company announced it plans to raise a massive $80 billion from stock sales to fund its aggressive artificial intelligence infrastructure buildout. Interestingly, that includes a $10 billion investment from Berkshire Hathaway. Now, normally, a massive stock sale like that can spook investors because of dilution, but the broader market was kept afloat by other key tech players, particularly in the semiconductor space.
Right, and we have to talk about Marvell technology. A massive 32% rally in a single day is eye-watering. What sparked that?
That was all thanks to Nvidia CEO Jensen Huang. He publicly suggested that Marvell could become the next trillion-dollar company. He pointed out that when you disaggregate a massive computing problem and distribute it across an entire data center, connectivity becomes the absolute bottleneck, and that is exactly where Marvell excels. That comment sent shockwaves through the sector, pushing the Philadelphia Semiconductor Index up by nearly 6%. We also saw Hewlett-Packard Enterprise surge over 19% after posting its biggest earnings beat since 2018 and raising its full-year guidance.
But one area where we did see a big reaction was in the U.S. labor market data. The JOLTS report came out, and it was a bit of a shocker, right?
It really was. U.S. job openings in April surged by 731,000 to reach 7.618 million. That is the highest level we've seen in nearly 2 years, and it completely blew past economists' forecasts of 6.88 million. The job openings rate jumped to 4.6%. However, actual hiring declined to 5.116 million. So what we are seeing is a massive demand for workers, but companies are perhaps hesitant to pull the trigger on hiring due to lingering economic uncertainty, possibly tied to import tariffs.
It's a complex picture for sure. We'll dive into how this is affecting the global markets, the energy sector, and foreign exchange in just a moment. We're going to take a very quick break. Stay with us. Welcome back to Market Brief After Hours. Let's shift our gaze across the Atlantic now. European markets had a pretty solid rebound today, largely supported by a slight pullback in oil prices and easing bond yields. How did the major European indices wrap up?
The Pan-European Stoxx 600 ended the session 0.7% higher. If we look at individual countries, the UK's FTSE 100 gained 39 points, or 0.37%, to close at 10,378. In France, the CAC 40 rose 0.8% to end at 8,209, with financial stocks like BNP Paribas leading the charge. Over in Italy, the FTSE MIB climbed 1.6% to close at a record 50,578, and Germany's DAX index went up by 121 points, or 0.48%, to close at 25,124.
And we saw some interesting economic data out of Spain and the UK as well, didn't we?
Yes, Spain's tourism sector is absolutely booming. They registered 9.1 million international visitors in April, which is a new record for that month, up over 5% from last year. On top of that, Spain's jobless claims fell by over 36,000 in May, bringing their total unemployed down to 2.32 million. Over in the UK, net mortgage approvals for house purchases rose to nearly 66,000 in April, the highest level since January 2025. So there are definitely pockets of real economic resilience in Europe.
But it's not all smooth sailing. Inflation is still a massive headache for the Eurozone, and it looks like it's heating up again.
It is. Eurozone inflation rose to an estimated 3.2% in May, driven heavily by surging energy prices, which were up 10.9% annually. Services inflation also crept up to 3.5%. This rise is directly linked to elevated oil and gas prices following the outbreak of the conflict in Iran. Remember, before this conflict, Eurozone inflation had actually dipped below the European Central Bank's 2% target. Now, Europe is incredibly vulnerable to these energy shocks because it's a major net energy importer. Because of this sticky inflation, markets are now pricing in a whopping 94% chance that the ECB will hike its key interest rate by 25 basis points later this month.
Wow, 94% is almost a certainty in the eyes of the market. Now, speaking of energy, let's look at oil. It was a volatile session today, but prices ended up higher. What's driving that?
It's all eyes on the U.S.-Iran negotiations. Brent crude futures rose nearly 1% to close at $95.89 a barrel, while U.S. West Texas Intermediate crude rose 1.5% to settle at $93.54. Both benchmarks are now at their highest closes since late May. Traders are waiting to see if Iran will agree to a deal with the U.S. to halt the conflict. At the same time, domestic factors in the U.S. are supportive. Analysts expect weekly storage reports to show that energy firms pulled 3.6 million barrels of crude from storage. If that's correct, it would be the 6th consecutive week of drawdowns, which we haven't seen since early 2025.
That definitely keeps the pressure on energy prices. Let's pivot to the currency markets because we've seen some really interesting technical setups developing in Forex, especially when we look at the key moving averages. Let's start with the euro against the US dollar.
The Euro-USD pair is in a bit of a consolidation phase, closing slightly up at 1.1632. But the big story here is technical resistance. The pair is currently trading below a cluster of major moving averages. It sits below its 50-day simple moving average of 1.1667, its 100-day SMA of 1.1697, and its 200-day SMA of 1.1681. This keeps the broader bias tilted to the downside, unless bias can push it back above that 1.1667 level.
And what about the British pound? It seems to be showing a bit more strength.
It is. GBP USD closed up at 1.3469. It has staged a nice V-shaped recovery and is currently sitting just above its 50-day SMA of 1.3449 and its 200-day SMA of 1.3423. However, it's currently capped by the 100-day SMA, which is sitting just above it at 1.3478. If it can break above that 100-day average, we could see some more upside towards the psychological 1.3500 level.
Interesting. How are the safe havens looking? The Swiss franc and the Japanese yen?
The USD-CHF pair is in a choppy, sideways range, closing at 0.7870. It is hovering right around its 50-day SMA of 0.7864, while holding above the 100-day SMA of 0.7828, but it's well below the descending 200-day SMA of 0.7906. Now, USD-JPY is a completely different story. It closed at 159.94, up 0.17%, and is flirting with the major 160.00 level. The bullish trend there is incredibly strong. It is trading comfortably above its 50-day SMA of 158.83, its 100-day SMA of 157.67, and its 200-day SMA of 155.16.
And what about the Australian dollar? Australia's Fair Work Commission just announced a 4.75% increase to the national minimum wage, which might have some policy implications. Did the Aussie dollar react?
Yes, the AUD-USD pair rebounded strongly, closing up 0.31% at 0.7182. It's in a very healthy long-term uptrend, trading well above its 50-day SMA of 0.7112, its 100-day SMA of 0.7057, and its 200-day SMA of 0.6817. That wage hike will impact about a fifth of the Australian workforce, which could keep inflation sticky there and support the currency.
Now, before we get to our individual stock market movers, I want to touch on gold and Bitcoin. Gold had a bit of an intraday rejection today, didn't it?
It did. Gold closed virtually flat at $4,487 an ounce, but during the day, it spiked as high as $4,542 before sellers pushed it back down. Technically, it's still in a bearish short-term trend, trading below its 50-day SMA of $4,626 and its 100-day SMA of $4,795. However, it is holding a buffer above its rising 200-day SMA of $4,386, which is acting as a critical floor.
And Bitcoin? It took a pretty nasty hit today, falling back around $67,000.
Yes, Bitcoin fell over 6% to around $67,015, its lowest level since early April. This was triggered by a bit of a psychological shock to the market. The software company Strategy, which is famous for its massive Bitcoin treasury, reported that it sold a small amount of its holdings. Even though it was a small, telegraphed sale, it went against the founder's famous never sell mantra. That spooked investors and triggered a massive wave of long liquidations. Nearly $594 million worth of leveraged long positions were wiped out in 24 hours.
That is a massive liquidation event. Let's wrap things up with our key market movers of the day. We already talked about Marvell Technologies' incredible 32% jump and Hewlett-Packard Enterprise's 19% surge. Who were the big losers today?
On the downside, Intuit was a major loser, closing down more than 8% to lead software stocks lower. This came after Goldman Sachs downrated the stock from neutral to sell, setting a price target of $276. Another massive drop came from Praxis Precision Medicines, which crashed over 22%. They announced that their focal onset seizure drug did not meet its primary endpoint in a phase 2-3 study compared to a placebo. That's a huge blow for a biotech firm.
That is all for today's episode of Market Brief After Hours. If you found this useful, please follow Market Brief After Hours on your favorite podcast platform.